Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. For those that don't really watch the recap and you just started to tune in, whether you found me on Twitter or a friend of yours told you how great, no, I'm kidding, just to introduce us to we basically have a technical background. We try and trade using technicals, using common sense, and letting price dictate what we're going to do. And we can see that with price patterns, and we could see how the market reacts to news. And then we react, and then we execute, and we try and have a plan. For me, I've been doing this for about 13 years, and today, as a joke, I was sending out some videos of my Google call, when I was on CNBC back in 2011, when I, at that point, didn't have just a face for radio. I used to go on a lot, and I called out Google as a stock of the year because it was the anniversary, so we were talking about it. And then, I put that call out iPhone to head back in April. I think Apple's going to be 100 plus versus, because people were just calling it Microsoft and they were bashing the split. So just so you know, I do throw out bigger calls out there for those that don't trade as active, for those that want to kind of have a thesis that agrees with me if it does. And so this way, if you're not trading every day actively, professionally, there are some stocks out there that I think you could own, and you don't have to always manage. In some stocks you could own and also trade and use a tier system. But our sweet spot tends to be the intermediate trend, when we're above the 8 and 21-day moving average. We try and be long. We look for patterns, have some type of portfolio approach. When we break it, we get a little tactical, we get a little neutral. You stay below the 8 and 21-day, we try and get a little short. But I don't try and put out some big, scary, downside predictions. I don't try and make headlines. But at times, I just try and keep people, in my line of thinking. And then if the market doesn't confirm my line of thinking, I'm not going to just start, making excuses for it and start cost averaging against what the market's doing and blow up my account and blow up, the community or the VTF. I'm going to say, you know what, I was wrong. 2 days ago, I thought Tesla was going to break out. It tried to go above 265. It didn't happen. I lost a little. I'll wait. But you'll never see me, get really stubborn, or I'll try not to, and just, keep moving along. So with that said, in the last 2 weeks, we've had a big snapback in the market. I know a lot of people out there were calling for a 10%, 15% plus correction, and they never, switched gears when we started to penetrate resistance. They never switched gears when the market said, you know what? That was the normal decline that we've seen over the past 2 years, and it's the same normal decline. And they probably blew up a lot of followers, trying to, be all in 4 or 5 times short, when a trader, cannot be all in 4 or 5 times short, because you could blow up your account and you become miserable, and then you don't go to the beach and enjoy your summer. So with that said, it's been a heck of a move, probably faster and quicker than anyone would have thought, but there were some spots for adjustments if you were not thinking on the right side of the market, if you had an opinion that the market negated, and if you switched gears, and missed out on a few things, better than getting blown out of the water. So if you look here at the chart of, this is the SPX, okay, we'll go there first. We've been, navigating these ranges. This was the first time we broke out after this monotonous range, when a lot of people were calling for a big correction here. You remember that? Didn't happen. We triggered above it, and that was a great area to get long. Then we followed the 8 and 21-day moving average, if you remember that. Okay, and what happened here? We broke below, and that was your get tactical, maybe get short, get out of the way, because, if you held your nose and went underwater, you might have hit it out down there, whatever. Okay, we also broke the 1952. Came in, hit the 100-day, and at that particular point, nobody really knew what was next. Okay, were we going to continue to the downside? Here, just say on this day, were we going to go to the 200-day? Were we going to retest 1885 or whatever this prior breakout was? You never know, okay? But what happened was we had this igniting bar that could have got you out of your shorts, could have got you thinking more neutral, and then really these 2 days were the most important to me. This showed that it wasn't going to pull in, that you saw some digestion above the igniting bar. Okay, negated a little bit of this wide range bar, and then to confirm a bullish thesis to be back in portfolio approach, you take this out. And that's what happened right there. So right there, you could have covered, went neutral, and then started putting positions on back right around here. Okay, and then
you had this day, you had that volatility day. I know I was too short on this day because I thought maybe we would get some resistance right here, and thank goodness the volatility hit, so we were able to trade out of it. And then you look how we closed, pretty darn good. And then that day happened, and now this day happened. So where were you in this range? How did you react? And that's what you have to work on, and be honest with yourself on how you handled it. So now here we are. We are plus almost, I don't even know, plus 50 something or other in the oscillator, right back near the highs. A spot that's going to be hard to get through right away, considering where we came from. We're extended from the 8 and 21 day. I'd love to see some sideways digestion here, maybe even a little bit of downside before going again, create like a cup and handle and then go, but who knows? Because in the Qs, if you did that on this day, thinking, all right, we're going to, come into resistance, and you ignored, what we were talking about. And remember, we were talking about what's going to happen here. The whole world was talking about this head and shoulders top pattern, which could have happened, and then that got negated right there. Okay, that's when it went higher, okay, and squeezed through what the bear should have defended. So some people shorted here and said, you know what, we're going to have to hit some resistance here. Let me just continue to roll that up, and then that happened, and then that happened, then that happened, then that happened. Okay, unless you're a paper trader, you probably had to cover and figure out what's next. And if you trade for a monthly P&L, who knows? You're not getting paid in August. If maybe you'll be right for a pull-in in September or next week or maybe tomorrow, but chances are you couldn't stay with this. So that's why you make adjustments when that happens. So anyway, here's where we are. It'd be nice here too if we could see some kind of pullback to retest maybe the prior high and come in, let the moving averages catch up, because nobody wants to feel like they're chasing. So sometimes it's hard to buy into overbought conditions. Doesn't mean you blindly short, because overbought could stay overbought longer, the same way oversold can. But you just be a little prudent. So one of the also clues that we had was the bios. Last week in the morning call, I probably talked about the bios 2 or 3 times in my Redler All Access note about the IBB at 252, that this time it was different and held in higher versus what the Russell did, and look what the IBBs did. Another clue that there was strength, that we weren't going to have that 10%, 15%, 20% correction right in here. Remember the last time we broke the 21 day and then came in and gave you this tight pattern? Just by the way, look at this. Below the 21 day and 8 day, you're out of it. Here, gets above it, you get back in it. Here, then, it breaks again, you can get out of it. And then what happened here? Started to coil, got back above it. It's pretty simple, especially if you trade active. Not simple, nothing's simple, otherwise we'd all be on the beach and not here. But if you're above the 8 and 21 day moving average and you trade actively, you try and be long. If it's below, you try and be short. So if it comes in and tests lower moving averages, you could actually test it versus being caught in the mess. But anyway, big move in the bios, held here. There's so many signals saying that we could be going higher, even if we pause into Fed minutes tomorrow or Jackson Hole. So as far as stocks are concerned, let's just roll through it. Apple, broke above 100. This was the iPhone with the head call here. This was the descending channel we broke above. This was the last time we really talked about a good meaty strategy. Now we are a bit extended. I still have a third of my options free. We bought the calls. People on the virtual trade floor saw us buy the calls here. So right around here, I talked about making some kind of call spread for 2/3. Still have a third free, and I'm also still in some stock. Got back involved in here for the breakout trading. Let's hope we get one more little move. You would think a stock like this, that has such a nice breakout. It sucks that it's up 6, 7 days in a row, so you can't have too much. Could continue. But anyway, great trading vehicle. I gave a shout out to Carl Icahn. He really was all over this thing 6 to 9 months ago, really adamant, really pounding the pavement. And for a big name stock like this, for people that at home could really buy, invest in, he probably helped a lot of people besides making money for all the people that are involved in his funds. Congrats to him. He's had a lot of big winners. But this one he was really adamant about, and hopefully the conviction that we had here helped you also with iPhone to head. I didn't want to do a bad visual, but there was too many people calling it Microsoft and the I split, and were bashing it that week, that I wanted to just give my cleaner version of it. So whatever. Hopefully you trim and trail, made some money, and we'll see what lies there next. As far as Google, big anniversary today. Last little strategy we had in the morning note was right here. then it held, and now it's coming back up. You know, if you look at the monthly chart, okay, right now this looks like it could continue. It's been a little sloppy. I know for us, for a trade, if it gets through this at some point in the fall, it probably has a really nice move. You know, but for those who are still in it on a macro basis, I look at the monthly chart, and the monthly chart still looks real good to me. Okay, where you know, this was the last time kind of went out there and gave a big macro call on Google, and it worked out pretty well. And now I'm not putting a macro call out there. I'm just saying, you know, it's looking pretty tight up here, and seems as if, you know, all-time highs could happen in the fall, especially if the market stays the way it is now, which it seems like it. Go back to the daily chart. Netflix talked about it holding 462, and it did. And now this seems like it's going to, you know, perhaps take out this high here. You know, maybe another day of flagging, and we get a nice little entry, kind of like we had for this two-day move. Looks good. This was also another nice little entry after the red dog reversal here. People ask me, okay, what's a red dog reversal? So let me do it real quick because I got to catch a ferry soon. A red dog reversal is a way to use pivots. You know, after a 4-day move to, you know, to up, you could write down the prior day high where they could push people through, squeeze the shorts if they were trying to short it on day 2, 3, 4, you know, and then you go for day 5 and pushes it through. People chase long, you know, and get in, and then people also cover their shorts, and then you come back below, and then it creates a tail, and you know you can get a counter trend move. Or sometimes it's a way for computers to clean out stops. And you know, Netflix is a good example right here. I want to show it as a red dog reversal where you had a range here going sideways after pulling from whatever this was, 470 into 420. It broke below support, so if anyone was buying here versus support, they probably got stopped out. If anyone thought, oh, look, this is kind of weak, it's going to get down to the 100 or the 200, you know, it came in, came back up, and got people out of their longs and trapped some shorts, and then you held here, and then keeping it here. If you use that tactic with the stop at the low, you've caught a really nice move, but chances are none of us really do it that way, but at least it put it on the radar for this potential day 1 into the day 2, into a nice flag, and then it continued. Tesla, you know, gave you a red dog reversal on the other side. Okay, we were looking at it for it to break out above this area, and it couldn't. Buyers lost control, sellers took control, closed it low, and some people actually made money short it as it broke below this area. And you know, at this point, it held the 8-day, thank goodness. So maybe it, you know, creates a new pattern. It wasn't able to show enough power in order to get through the prior high, but still's fine. Still holding the 8-day, just needs a little bit of you know, work, you know, to work to do here. So we'll see what happens there. Oh, just by the way, another red dog reversal, you know, which we talked about is right here. Okay, you know, for a move from 99.44 down to the 50-day, it traded below 94.10, put a low around the 50-day at 93.28. Once it came back above, that's your buy. This is your stop, and you could have been trailing it and making a really nice move off of a red dog reversal with very limited risk. Look at the risk here, 94.10. This is 93.28. You're talking about 80 cents. Boom. Anyway, you know, that's some different examples of a red dog reversal in stocks that we trade. So as far as social media, I actually saw a red dog reversal on LinkedIn. So what did I do this time? I took it home short. You know what? We'll see what happens. You know, we were buying this stock. I think, what's it called? Sperling had his play of the day right here. Then you had your earnings gap. It's been, you know, riding this up. First time it pushed through and kind of failed. So, you know, to me, it's a little bit of a sell signal. So I got a little short, and we'll see what happens. Does it do a Tesla and, you know, perhaps test 214 or maybe even a little bit lower? We shall see. But, you know, this is a signal that if you were long during this time, hopefully you sold some. And at this point, you know, your first time, maybe you can get a little bit of a counter trend move, and now you could be short versus 221 and see what happens next. But on the flip side, I'm long Facebook, which still is, you know, not showing much power, and it's trending higher above the 8-day. And I'm also long little Twitter that it's getting tight here. No real power. Maybe in the next session or so it triggers above this 44.50 and continues. I know I put the chart out of GWPH today. It never triggered and went through 93.5 with authority. It still looks tight, still looks okay. Hopefully at some point in the next few sessions it does. I'm still in the options. I'm just not in the stock. I will wait and revisit, you know, for that type of day trade move through there. If some kind of news comes out, I'll have some options and we'll see what happens next. Let's see, what else is going on? Bank of America, nothing really to talk about. Pushed through and came back in. The banks all kind of reversed today. So nothing much to report there. Some funds seem to have flowed to the XLE. which is why the market's not really pulling in. They're getting this rotation game again, where a little bit of a push above this prior lower pivot, so see if that continues. XLI, I would think that if you were long it, perhaps into resistance, which you're coming into right here, you trimmed a little bit. This is a really nice move from the 200-day. Look at this. If you sold the XLI when it broke the 8 and 21-day right here, you had the luxury of watching it at the 200-day and buying here on this engulfing day of this bottom range. That's why you use these moving averages. And if someone wants to call it a moving average monkey or whatever the hell people out there who don't believe in technical analysis say, so be it. I'll be a moving average monkey. Wah, wah, wah. Give me a friggin' banana. I'd rather trust the moving averages than opinions and people's thoughts or their own agenda. So anyway, moving averages do help as long as it's part of your process and you understand what they mean and how they mean it and your time frame. So with all that said, hopefully you've been having a good week or week and a half riding this rally. We are a bit overbought, so I did actually put a little bit more of a hedge on than I've had in the last 2 sessions. I still have some longs, have some shorts, have some options, just trying to manage positions, make some money, enjoy the summer, and get ready for hopefully a more active fall. So if you're at your desk, be prepared. If you're not, don't do it half-fast. You might as well just go to the beach or the Hamptons or the mountains and enjoy the last week and a half of the summer because the fall will be here before you know it. Have a good night.